Hey everyone, my name is Sherman, a CPA here at Life Accounting, where we help you save on taxes and increase your wealth. Today I'm going to help you do this by explaining the difference between tax avoidance and tax evasion. It is very important that you understand the difference between these two approaches because one of these approaches is completely legal and the other one can put you in jail. And if you're anything like our subscribers here, you probably want to pay as little in taxes as possible, and there is nothing wrong with that, but you also don't want to get locked up in the process. So if you want to pay less taxes legally, go ahead and help me get started here by giving this video a thumbs up. If you don't want to miss out on more ways to save on taxes, then be sure to subscribe to our channel. All right, so the first big thing you need to understand is that your tax is based on your facts. If you want to change your tax, you need to change your facts. And as long as you pay the tax associated with your facts, then you have nothing to worry about. However, problems arise when you don't A, pay the tax that the law says you're supposed to pay, or B, your facts are blatantly false and intentionally misleading. And that is where the conversation of tax avoidance and tax evasion comes into play. Tax avoidance is an action to lessen your tax liability and maximize your after-tax income. There is nothing illegal about avoiding taxes. I repeat, avoiding taxes is not illegal. The IRS says that tax avoidance is perfectly legal and that IRS regulations allow eligible taxpayers to claim certain deductions, credits, and adjustments to their income. People who leverage the tax law to their benefit are not tax cheats. They are simply taking advantage of tax incentives that were literally written into law by Congress. Always remember that the tax law was written to incentivize taxpayers, like business owners, real estate investors, and other types of individuals with very unique set of circumstances. And if you are unhappy with your tax liability, then you can change your circumstances to pay less taxes. For example, an employee might contribute to their retirement plan to lower their tax bill while accumulating more investment income. Or you might start a business to earn more income while taking advantage of all of the tax write-offs and tax credits available to business owners. Or you might take that business and convert it into an S corporation to save on self-employment taxes. Or you might invest into real estate to earn passive income, but also take advantage of tax benefits like depreciation and like-kind exchanges. And there are many more completely legal tax avoidance strategies. And if you want to learn more about tax avoidance, go ahead and drop me a comment below and I'll make a separate video that goes into more detail here. But the point here is that there are tons of events that can change your facts when you file your tax return and result in a lower tax bill, which is the goal of tax avoidance. There is nothing wrong with wanting to pay as little in taxes as possible and using the tax rules to help you to do so. But there is something wrong with evading taxes altogether, and that is where tax evasion comes into play. To be clear here, tax evasion is illegal. Tax evasion is the failure to pay your taxes or a deliberate underpayment of your taxes. So if you fail to pay the taxes you owe, then you are evading taxes. Or if you deliberately underpay your taxes, you are evading taxes. Let me explain what this means. In the US, it is your responsibility to report all income that you earn. And as you know, your taxes are based on the amount of income you earn, which also leads to one of the main ways people try to evade taxes, by failing to report all or some of their income. In their eyes, if they don't report the income they earn, then the IRS won't see it and they'll pay less taxes. For example, let's say you're a barber, hairdresser, landscaper, or any type of professional that is typically paid with cash. Well, because your customers pay you in cash, you may decide to report less income on your tax return than you actually make, because who would really know how much cash you made, right? Well, it's this type of thinking that may get you into some serious trouble with the IRS. This would be a failure to report some of your income, which is illegal. Another major way that people commit tax evasion is by claiming deductions for expenses that they did not incur. For example, let's say you own a business. And to lower your net income, you claim deductions for personal expenses that have absolutely no business purpose, which effectively lowers your income. Well, in the event of an IRS audit, you could be guilty for committing acts of tax evasion by overstating your expenses, which is your deductions. Which is also why it's a good practice to do your business books, use a business bank account, and always keep up with your receipts for business expenses that you claim as deductions. You don't want to have a hard time proving legitimate business expenses because you are not keeping up with your documents. And there are many other ways that people commit tax evasion. For example, if you fail to file your tax return, fail to pay your taxes, or lie on your tax return, like claiming dependents that are not really dependents, that's a very popular one, or you make errors that do not appear to be mistakes, then you may be guilty of tax evasion, which is just not necessary to lower your taxes when there are many perfectly legal ways to avoid paying taxes by just using the tax law as your guide. And if you want to learn more about tax avoidance, let me know in the comments below. Thank you for watching, and I will see you in the next episode.